Have you ever wondered how billionaires seem to move vast fortunes across the globe, almost like magic, while the rest of us are filling out forms just to send a few $1,000s? It's not magic, it's a highly sophisticated system, and today, we're pulling back the curtain to see exactly how it works. Welcome to the hidden world of ultra-high net worth finance. Let's start with a mind-boggling number. The world's wealthiest individuals control tens of trillions of dollars. But how do they keep this wealth mobile and, more importantly, private? It's not about stuffing cash into suitcases. That's for amateurs. The real game is played on a much grander, more complex stage, using a combination of legal structures, financial instruments, and a global network of specialists. One of the cornerstones of this system is the use of shell companies and offshore jurisdictions. Imagine a set of Russian nesting dolls. A billionaire might not own an asset directly. Instead, a company in Delaware owns it. But that Delaware company is owned by another company in, say, the Cayman Islands, which in turn might be owned by a trust in Switzerland. Each layer adds complexity and obscures the true owner. These jurisdictions, often called tax havens, are chosen for their strong privacy laws and low to zero tax rates. Setting up these companies is surprisingly easy and can be done online for a few $1,000s, creating a legal entity that exists only on paper but can hold billions in assets. So, you have your network of shell companies. Now, how do you move money between them without raising red flags? This is where intercompany loans come into play. A shell company in one country can loan a massive sum to another shell company in a different country. From the outside, it looks like a legitimate business transaction, but since the same person ultimately controls both entities, they're essentially just moving money from their left pocket to their right pocket. No sale has occurred, so no capital gains tax is triggered. It's a clean, quiet transfer that looks like debt on the books, further complicating the financial trail for anyone trying to follow the money. But what if you want to use that money to buy something tangible, like a super yacht or a mansion in London? You don't just wire the money from your personal bank account. That would create a direct, taxable link. Instead, one of your offshore shell companies makes the purchase. So, on paper, the yacht isn't owned by you. It's owned by Neptune Holdings, Ltd., based in Panama. You simply have the right to use it. This creates a powerful layer of separation between your personal wealth and your luxury assets, making it incredibly difficult to trace ownership back to you. Art is another fascinating vehicle for moving wealth. A multi-million-dollar painting is portable, valuable, and its price is subjective. A wealthy individual can buy a piece of art, store it in a high-security, tax-free warehouse known as a freeport like the ones in Geneva or Singapore and then sell it years later. The artwork can be sold or used as collateral for a loan, all while sitting inside this freeport, never technically entering the country it's stored in. This means no import duties or value-added taxes are paid. The ownership of the painting can change hands multiple times without the art ever moving, making it an almost perfect, untraceable asset for wealth transfer. And let's not forget the power of debt. This might sound counterintuitive, but the super-rich often preferred to live on loans rather than spending their actual money. Here's how it works. Instead of selling stocks or other assets and paying capital gains tax, a billionaire will use their massive investment portfolio as collateral to secure a low-interest loan from a private bank. They then live off this borrowed money. Since it's a loan, it's not considered income, so it's not taxed. They can use this money for their daily expenses, luxury purchases, or anything else. The portfolio continues to grow in value, often at a rate higher than the loan's interest, meaning their net worth actually increases while they're spending borrowed tax-free cash. It's a strategy known as buy, borrow, die. When they pass away, their heirs inherit the assets at a stepped-up basis, meaning the capital gains are essentially wiped clean for tax purposes. Now, let's talk about the professionals who make all of this possible. This isn't a one-person operation. It requires a small army of highly specialized lawyers, wealth managers, and accountants spread across the globe. These experts, often working for boutique firms or the private wealth divisions of major banks, are masters of international tax law and corporate structuring. They are the architects of these complex financial mazes, ensuring every transaction is legally compliant, even if it pushes the boundaries of the system. Their job is to protect their clients' wealth from taxes, creditors, and public scrutiny, and they are very, very good at it. Another powerful tool is the trust. A trust is a legal arrangement where a person, the grantor, gives control of their assets to a trustee, who manages them for the benefit of a third party, the beneficiary. For the ultra-wealthy, irrevocable trusts set up in specific jurisdictions can be particularly effective. Once assets are placed into an irrevocable trust, the grantor technically no longer owns them. The trust does this can shield the assets from lawsuits, divorce settlements, and estate taxes by appointing a trusted advisor as the trustee and themselves or their family as beneficiaries. They maintain effective control while enjoying the legal and financial protection of not being the direct owner. And what about the rise of digital assets? Cryptocurrencies were initially hailed as a tool for anonymous transactions. While many public blockchains are more transparent than people think, the industry has evolved. Privacy coins and mixing services are designed to intentionally obscure the flow of funds, breaking the chain of transactions and making them much harder to trace. The wealthy are increasingly looking at digital assets, not just as an investment, but as another potential avenue for private wealth mobility in the digital age. So, to recap, it's not one single trick. It's a multi-layered strategy. It starts with a web of shell companies in privacy-focused jurisdictions. Money is then moved between them using tools like intercompany loans. High-value portable assets like art are used to store and transfer wealth discreetly through free ports. The buy, borrow, die strategy allows the rich to live a tax-free lifestyle by taking loans against their appreciating assets. And this entire ecosystem is managed by a global team of elite financial and legal experts who engineer these structures to be legally sound. It's a complex, fascinating, and often controversial world that operates in parallel to the financial system most of us know. Understanding these mechanisms gives us a clearer picture of how global wealth truly flows. Thank you so much for joining me on this deep dive. If you found this fascinating, please hit that like button and subscribe to the channel for more content that explores the hidden side of our world. We'd love to have you as part of our community. See you in the next video.